Aniket, hi, good morning. Good to have you on the show. How do you think the numbers are going to stack up this evening from TCS? What are your expectations?
Hey, hi, morning. So for TCS, we are expecting strong CC revenue growth of around 3.5% this quarter and dollar revenue growth of 3.6%. Basically, this strong growth would be powered by seasonal uptick in spending by clients, okay, and also there would be strong ramp up of deal signs into earlier quarters. Similarly, I believe that there would be very strong market share gains and vendor consolidation gains also for TCS. Secondly, on profitability, I expect that margins to decline by around 150 basis points on a QOQ basis because there is an impact coming of wage. There is an impact coming of wage revisions also, and there is also higher subcon cost which will play out in this quarter. I believe that there would be some pressure seen on margin this time for almost all the IT companies because there is a lot of talent war which is going on. There is a lot of the strength in demand is quite strong right now, and the digital talent is quite limited. So I believe in this quarter we will see sustained pressure coming on margins on across front by this.
Sure. Also, Aniket, just wanted to understand what is it that you're making of the pre-positioning on the stock ahead of the numbers? I mean, year to date, TCS has already surged about 14.5%. In the last 1 month alone, we've seen a 3% price performance. And it's not too far away from some of the more bullish price targets from brokerages on the stock price on a 12-month basis. Do you think the best for now is already in the price? What's the scope on a marginally above expectation earnings or at par with expectation earnings for the stock to move up?
Yeah, so basically every time we have seen the similar phenomena in IT stocks that basically stocks go generally up after or before Accenture's results, and stocks starts to consolidate during the IT results time. So now also basically I believe that, as I mentioned before, the strength of demand is quite strong. You won't have any issues in revenue growth for a couple of next quarter also. You won't have any issue happening into the TCV also this time in almost all the companies. We will see increase in TCV not just on QOQ basis but also on YOY basis for them actually. So I believe as long as there is strong intensity of spend which is there into US bank and US retailers, okay, I believe that tailwind coming from that will be maintained. There would be some pressures on margins, as I mentioned before, due to supply side issues over there, but I believe that margins will normalize in couple of quarters only. So in spite of valuation being at all-time high, I believe that going forward there would be more surprises coming into this sector. As in yesterday in ISG call also they clearly mentioned that the deal wins which they had was at the deal wins for the IT sector is at historical high, and there was no impact coming from COVID also on the supply side. Okay, so I believe going forward this sector will keep you surprising, and valuations would be maintained for this sector at this level because revenue growth, tailwind and deal pipeline are very, very strong. Some issues in margins are there, but I believe that would be normalized in coming quarter. So irrespective of the sector being at all-time high, we continue to remain overweight on this sector.
Thanks very much, Aniket, for those details. TCS at 32.65. It's a little bit soft in today's trading session.